This is Justin Pulitzer. This is my midweek video for Wednesday, October 22nd, 2025. I'm filming this late night Tuesday. So we came into the week with a little bit of a shift in sentiment over to the sidelines. Granted, it was a little bit of a lower reply rate than I would have liked. Please be sure to like and retweet those sentiment gauge polls. It goes a long way to help with the algorithm. But yeah. That's the story. It makes sense. I think a lot of people like to go to the sidelines when they feel a little uncertain at all-time highs. Now, the CNN gauge is a whole other story. They have been very fearful. They're not quite into the extreme fear. Remember, we bottomed in single digits. And it's interesting, the market's basically back to the all-time highs, and we're still fearful. Where is the euphoria that markets need to die on, right? We don't quite have a euphoria. Truth is, actually, markets die on recessions, but I don't think we're getting one of those. I've told you, I think the inflation situation is stabilizing and then growth has been accelerating, and I am expecting a lot of the big, beautiful bill stuff and the investments in America to really kick in next year, which I think will put growth into overdrive. Shorter term, there might be a little bit of issues, particularly with the government shutdown and Powell being a little slow to cut rates, although better late than never, but it is late. And, of course, the lag of high interest rates and the long and variable lags of high interest rates, I should say. And, of course, the potential here for a little bit of employment dip with all the firings, particularly government firings. And we found out after the fact that for the prior 4 years, all of the hires were basically wiped away by the BLS corrections. It's really insane. But it is what it is. Anyway, as far as VIX goes, this was a tale of ranges here. The 22 to 2251. Once that cleared, we got the 2832 to 2957. And then after that, we not only knifed through the 22s, but we got down to the 1724 to 1757 and found support. I told you I thought 17s would find support, maybe overshoot to 1623. But going into earnings season with the Fed next week, kind of seems a little appropriate that volatility kind of hold in there just a little bit. I mean, come on, right? As far as the TNX, now this has been a big time help for the bulls. Interest rates, the 10-year, by the way, the whole world and your life is run on the 10-year mortgage rates, car loan rates, credit card rates are even based off it, for Pete's sake. Anyway, I'm still trying to figure out who Pete is, but, for Pete's sake. So we're coming down here possibly to the channel lows and the reference low that we saw back here on 4-4, but the risk reward down here is starting to get a little iffy, and of course the worst scenario would be, of course, a look below and fail. All right, so what now, right? That's always the most important question of the day. Anything that remains below 39.92, I think, is better for the bulls, meaning stock bulls and bond bulls for that matter. Back up above, gets a little iffy. We could see 40.38. We could see 40.81. Yeah, that could be a little bit problematic. But as of now, we're still bleeding off, and it's possible we kind of just chop around here first. That tends to be the pattern before any bounce, but yeah. Little macho man Randy Savage there. So, oh yeah. We're coming up to a volume node here in the TLT. Bit of a gravestone doji up here, which isn't always the most comforting. And I do think that there will be some reference muscle memory sellers here. Now, pullbacks to 9104 I think are still okay. 10 MA is closely picking up here. All the MAs are upward sloping now, which is good, and we seem to be banking higher lows and higher highs, which is always good on this leg. We're not quite fully overbought yet, but another couple of days, maybe. So keep that on guard, and we have seen a pattern. The Fed, by the way, is next week, and the government, I guess we're still getting the Fed because they're not even really a government entity, but probability of the Fed cut is pretty high. October, it's basically done. It's almost 100%. 1.1% that they don't. And Powell has basically told us they're going to. So barring some unforeseen incident between now and next Wednesday in a week's time, it seems like that's happening. And December seems on like Donkey Kong too, 96.9% probability. So, yeah. The economic data, this is a little iffy because we still have the government shutdown and everything is pretty much delayed. We will get a few numbers though. It looks like we're going to get petroleum because it doesn't have a delay next to it, existing homes, claims, and the CPI data may come through because I think that adjusts for Social Security. So I think I heard Santelli say that it's coming through, but that would be interesting on Friday. So still to be determined. Moving right along, the XLF. So we had a run up here. We were respecting the channel high. We got here down to channel low, bounced around a lot. We're back up over it. I'd say simple. Bulls need to hold. I mean, it's better still over this 52.64 to 52.58-ish area, the 100 MA. I would say the maximum allowable pullback here before it gets to be too much for me is 52.26. Interesting where it stalled though, right? 53.06 to 53.27. Not even quite to the 20 MA, which had been prior resistance. So the bounce to me today was a little weak. Tuesday, I mean. Now, if we want to get the Mo Bros back in action, they got to get it over 53.49. If they can do that, I think it's back to the races. But until then, it's just chop with liquidation break potential, I think. Anyway, JP Morgan, 20 MA also resisting. We have a bit of a downtrend within an uptrend. We were trading above the channel. Now we're in it. I'd get more concerned below the last earnings spike high, which was 295. So far, moves below it have not sustained, and they better not, or it's going to continue bleeding off, probably back down to 280 quarter. So keep that on your radar. The dollar. Now, I had gone out on a limb, although an educated one, because I do have some experience trading currency. And I noticed here that the 100 MA had been resistance, and I said pullbacks would be buyable. And we had the channel low 50 MA and 100 MA confluence there, and boom, we're back up. Now, I don't think this is going to be a straight shot by any means, and it could be a long accumulation funnel, but I think by next summer, this is going to be significantly higher. We had the look below and fail scenario, so we could potentially continue up. If the 100 MA is lost, currently 98.111 and turning, then all bets are off, and it could be back to the downside. But as of now, it's looking good. The Bitcoin, now this is really very puzzling price action for a couple of reasons. One is we were up nicely after the 200 MA test, and then in the overnight session last night, meaning pre-market Tuesday, Monday night, this was down gigantically, and then we were up pretty big in the RTH session to close sort of flattish. And now we're down again big in the overnight session. I mean, it's not gigantic, but it's something. And I'll tell you, the bulls really do need to hold 107,790. Below there starts getting iffy. I guess 107,705 was the prior night's low. If that fails, we could retest the 200 MA, and the more times you bang on it, that's not good. Now, the 100 MA moves below it and above it had been longs, and now it seems moving above it and below it is a short. So 100 MA failed. Could we retest the 200 MA? I mean, it seems likely as long as we're below the 100 MA. So 113,466 needs to clear. I have alert over the high here at 111,065.01. If that clears, I think you could probably try long for a pump back up to the 100 MA. Now, gold. Now, this was very interesting today because I had mentioned in several videos that I liked selling it between 400 and 402 and change, and we actually got 403.30 in the prior RTH session. Now, today we had a big gap down, and it was a gap and go. So So what now? So what now? So what now? Anything that remains below the 10 MA at 381.90 remains bearish. Below low of day at 375.65 would confirm that to me, and we'd probably come down to at least the 20 MA at 368.04 and possibly significantly lower. I would say that you have the potential for a pro gap, meaning the gap that starts a decline until we can take back today's high of the day at 388.89. If that happens, and I'm going to put an alert here, that when what shouldn't happen does happen, don't ignore it. That to me would be back to the long side. Probably, I mean, we could have a little look in and fail, but I would say that that is bullish. And we could probably get up to 394, maybe even back into the 400s. But if it just consolidates here for a few days, and then let's say it consolidates here inside the 2-day range, the more days and more time we spend inside that candle, the more it should tip over. So whichever way that candle breaks, meaning down or even up, would be more violent the more time that's spent down there. GDX, I would love to do a play. I don't know if we're going to test back to these 53s, 54s, but we could test back maybe even to the 100 MA, possibly 61. So I think rallies now to the 20 MA at 77.26 to the 10 MA at 78.62 are probably fades. You want to sell into them. Basically, we stalled at the 2.6. We came down to the 2 times range. So this is the must hold right here on the top side of the channel. If that can hold, we could go back up. And you know what I always say, that first test of the top side of the channel is a buy for me. So we'll see where this, particularly from an all-time high. I don't know how high the bounce will go. My guess is maybe to those levels. But if it doesn't and we bleed into the channel, I think we could retest the 66.98, which was the old high from back in 2011. So I should probably make this a little bit more prominent. Now, the money flow has not been confirming this. If anything, it's been rolling over. And we've seen some big spikes on volume on down days. So I do think that there is opportunity to sell the move here. Silver, just parabolic. This also got back, to the 2011 highs here. The 48.35, and now we're pulling back. Look above and fail. It makes total sense to me that this was a sell, and you probably had a lot of people who were waiting with orders at $50 because why not? And they didn't get it, and now they're pissed. So the 50 MA had been key support. That may be again at 39.71. I would give this a little bit of time to cool off, and if it does get back up over 48.35, fantastic. If not, just let it chillax a little bit for a bit. Oil bouncing. I think this is interesting because if we sweep the leg of the 55.12, that could take us down to 49.31 to 50.60. And that would be channel low. And maybe this happens on announcement of a deal with the end of the Ukraine war, which I do think is going to happen. It's taking a little longer than I'd have liked, but hey, that's sometimes how the world works. 61.45 had been prior support. My guess is that will be resistance if we continue to rally. So keep that on the radar. XLE, it's going to be tough for this thing to sustain if oil is dumping, but there could be some bouncage to the 50 MA. That's with prior support. Now, moves below it and then back up above it had been the long, so now maybe moves above and then back below are the short. So we'll see. If you're long 86.21, 50% fib is as good a stop as any, because we could come down to the 84s if that fails. I mean, if we do have a pop for whatever reason, 88.97 to 89.43 to me would probably be a good area to trim into if you didn't get out on time. I'm going to pull up SPY, but we're going to talk about the ES and the NQ. And I just want to go back and remind everybody, after this really, really nasty candle, I had to come on that Friday and make the bold prediction that we would revisit the highs. And I don't look so crazy now, do I? Why? That was because in the Wayback Machine, we still haven't quite got there. The old all-time high was made in an overnight session. And this was a very big liquidation break on news. This was the China trade war heating up again. This was just a complete waterfall down. So, and it corrected a lot of poor structure, don't get me wrong. But if this would have hung out down here for longer, that would have been more concerning. And listen, we did have another scare, actually. We took out the higher, we had a higher low, and then we took that out and now back up. So, look, I don't want to break my arm patting myself on the back, but I wanted to show you when you see these patterns, this is just how the market works. And I'll tell you, I don't know if this high is going to be eclipsed by very much. I still think we're going to see resistance in the 6,800 level. So keep that in mind. All right, so what now? Let's talk. The 681283. I don't even know where the 83 came from. It's clearly a mistake. We're going to use the old high here. There we go. So we're going from the all-time high because just why not? 6812 quarter. Now, are we going to get a look above and fail? Are we going to look? First of all, the natural properties here would be to test it and then back off. So sometimes you overexceed it and then come in. So that's not necessarily a look above and fail. What would constitute a look above and fail, in my view, I mean, technically any price action does that, but if it goes up and it like just sort of like chops around and then goes over it again, it's just responsive selling. If we get one of these type of events where we get a huge sell-off, like we hit the buzzer and boom, then that to me is the real look above and fail. Shorter term, there are a few things to note. We have a rich close that has not been repaired, and this will be a big downside target if there's any big flush in the market. 66 half. Shorter term, the bulls need to hold on to a couple of levels. First of all, it's 67.54 to 67.66.75. As long as that holds, it's fine. If that fails, the next big support zone besides the 200 MA 30 minute, which is 67.24 quarter and rising, would be from fib to fib. Remember, 78.6 would take us down to 61.8. So that would be 67.08 quarter or half to 67.18 half. That's the next big zone. So these are my must hold zones. And on the Qs, it's sort of similar. Let me zoom this in a little more. It's interesting with Netflix down as much as it is that this isn't really coming in all that much. And it was just up. It was actually green a few minutes ago. We had a small rich close. This is clearly repaired. Let me get rid of that, as is the one from the prior session here. I can get rid of that now. Oh, come on. Remove text note 12. All right. Give me the business, why don't you? Now, if we pull back, the must hold is the 78.6, and it's kind of far from where we are. But this was a lot of resistance, and I think would be support here at 25,129 half. And the 200 MA 30 minute will likely be there by the time we get there. After that, you're looking at 25,026 down to 24,922, and the 61.8 would be that 24,922. After that's the apples to apples rich close repair at 24,802 half, and that's the same, by the way, as the 66.66 half. So those are big targets on the downside if we get them moved down. We're very, very close to the all-time high here at 25,394. So it would make sense to me that we'd at least touch it because we're so close. We'll see, but that does make some sense to me. Now, with regard to SPY, the expected move is $7.60. And the max pain pin is 667. It is bookended by 669 and 667, so that area seems roughly accurate. The all-time high here is 673.95, and I have two very annoying. Is that one I want to ruin? No, I don't want to get rid of that one. Just want to see if I get rid of the other one. All right, for now it's fine. Few things to note here. Anything above 670.23 to me is more bullish than bearish. Below that, the must hold, the absolute must hold for me is 667.34. This was the 923 high and the low of day from the prior session. Now, technically this is a gap and go above trend, and when that happens, we should technically, quote unquote, fill up the pennant here to 673.95. So that's what should happen here. Just like if we would have broken on the downside, we would have filled up the pennant down to the 652.84 low from 1010. By the way, we have now spent 2, 3, 4, 5, 6, 7 trading days inside this 1 day's candle. And we've traded to the lower end of that range again, and now we're up to the higher end. We could wind up being inside this candle for a while just because it was such a big range. These big emotion days, to me, and the more time that's spent inside of them, the ultimate break up and out or down and out will be larger. Okay, so this to me is really the range defining candle. But we're pretty close back to the highs. Now, let's say the bulls really do get it going again. The channel high is a lot higher at 687.19, and by the time we get there, you'll probably get people saying we're getting close to 700, right? Could just be a slow grind and chop. We'll probably break out, check back to the breakout, chop around, false down, and then up. That kind of type of action. That just seems to be like the type of tape we're on. Although I'll tell you, you're starting to see multi-decade highs in things like GE and GM. I mean, I will get to those in a bit, but I mean, it's just unbelievable that some of these stocks have it took 25 years for GE, by the way, to get back to those highs. All right, so as far as the DIA goes, mini look above and fail of the 470.38, but look, we're above the 1010 high comfortably. So the DIA is stronger, which is impressive. Now, if this does the full Monty, oh, I knew that was going to happen. If this does the full Monty to the channel high, I don't know how many days it would take to do this. You'd be looking at 486-ish. For me, I would be careful below the low of day here at 466.91. If that happens, I think there's a clean line to the 20 MA at 463.37. The expected move this week is $5. Max pain pin is 462. I like the Dow. There's none of those 0-day expirations. It's just the one weekly. It makes it a lot easier. IWM. Expected move, $4.79. Max pain pin 245. Book ended on either end by 245 and 248. And when I say book ended, those are the 0-day options that expire the Thursday and Monday prior to this Friday's expiration. IWM. As long as we're over 244.98, it's fine. As long as we're really over the 20 MA, I would say at 244.25, it's fine. Below there, then I'm thinking 50 MA at 238.76 and maybe even the 235.42. Of course, don't get me wrong. We could always retest the 1010 low here at 237.56. But anything over 247.18 plus, that just can keep going. It doesn't surprise me because in the end of moves, you kind of start seeing the junkier stuff rise to the top. But expected move again is $4.78, 245, and bookended by 245 and 248. The Qs, the most important of them all, really, right? With all the mega cap, mag 7, whatever you want to call them, names. The Qs have a nice little dubstep situation going here. So 409.32 below there, I think could be a short down to the 10 MA at 604.07 and maybe even 602.49, the 10 and 20 MAs. Now, if we clear the 2-day high at 607, what is it? I'm sorry, 612.80. Yeah, 612.80. I mean, we're right at the all-time high here at 613.18, right? So theoretically, we should get there and clear there. And if we do, and we do the full Monty to the magenta channel high here, depending on how many days it takes, it could be 623.80. But we are brushing up against those highs. Probably a good opportunity to trim some gains into strength, because I assure you, a lot of people probably got spooked by this candle. And I mean, why wouldn't you? You basically traversed the entire range within one candle here, down to the 588s, 589s. So, I mean, it was... this was a successful test here also of the dump low, but I mean, this I mean, I would have liked to actually, believe it or not, have seen this even go a little further to the 584.37, which would have been a perfect channel test to the and the 50 MA. But I mean, for crying out loud, this is a big move lower. The expected move, I told you $9.20, or did I tell you? I don't even remember. I'm sorry, $9.29. Max Pain pin 605. Book ended by 609 and 605. So that's a little weird. The book endings there, but hey, sometimes book endings can be weird. SMH, even with a little weakness in NVIDIA today, SMH is still in the channel, kind of opposing tails, still above the 10 MA, still above the 20 MA, and the 20 MA, as we know from the 1010 dump, is the key MA. So 335.62 is the absolute must hold. Now, if we do get a little love in some of these big, probably get a deal with OpenAI tomorrow. That'll get everything going again, right? 361.89. And by the way, that browser, I tried downloading it because it's for Mac apparently, or only, I think they said. And I can't even get it on my Mac because I have the older Intel version. I have the last year of the iMac Intel. And now it has the smaller screen or whatever, and I haven't flipped over to the Apple chips for a few reasons. My screen recording software won't work on that. I have to use the newer one, which I don't like as much, that I use on my laptop. And I also am very comfortable with this machine. Why do I need to buy a new one? It's a solid state drive. This thing could last for years. But I am noticing, that's they're phasing me out. The obsolescence. I can't even get the updated Twitter for it. I have to use a third party app. It's getting. I probably will get a new one soon. NVIDIA. Speaking of which, we are bumping up again. First of all, we had this kind of big move. The 1010, we're below the 1010 candle, which is not so good. But I mean, the 1010 candle was all-time high, so it kind of is what it is. I'm noticing resistance on the 5s, 85s, and then 90, and then 95s. The 50 MA has held, and if that were to fail, we would retest the 177.29, and maybe the old earnings dump low at 171.86, which will probably be the 100 MA by the time we get there. The bulls really would do themselves a favor getting themselves up and staying over the 185.20-ish area. Really, I thought this was going to kind of ignite again over the 184.87, and it didn't really, and we're just chopping around. Now, in context, we've done this before, and we're riding the channel high. The green is the channel high. We have had a channel within a channel, and then we have a potential down channel. But this, again, like I said, potential, to me, this is still just sideways price action. So maybe it's waiting on earnings. We'll see. But NVIDIA, it clearly looks, to me, still bullish, but it's a little choppy shorter term. Broadcom also respecting the channel. This was a kind of a bold call for me up here because a lot of people thought we were just going right back to highs. I'm like, I think we're going to respect the channel because we were bouncing off it here. Then once we got in it, we held it basically here, and that just seems to me to be the case. Now the channel is still up, so we could keep going, but I would start probably getting more bearish below the 50 MA at 329.54. Shorter term, if you want to use the 20 MA at 340.61 as a stop, that makes a lot of sense to me. Micron. Oof. Potential gravestone doji and secure high. If you're short, you could just use 205.87 high of day here as a stop. I mean, to me, it's still above the 10 MA, 195.62. So that's probably a good must hold. I mean, we're still on a trend line here at we're above the 2 times range. I mean, the 2.618 is 240.38. So as long as we're above the 2 times range and the 10 MA, it's still all right. After that, I mean, we could start filling in. I mean, maybe we get down to the 170s. Maybe, 179.61. But to me, it looks like we're testing above the range. If we fall back into it, we could probably come down to the lower end of it. But right now, we're still kind of in the test above phase. AMD, they got a deal, an OpenAI deal too. It just seems to me like a grind higher. Anything that's over 227.30 is still fine, believe it or not. And I'll have to do some upside projections. But if we were to draw on a channel here, I'm not so comfortable with that render. I actually prefer it with this high. Yeah. We could be looking, I'll do it both ways. 247.72. Do it live. To quote the Bill O'Reilly. You ever see that? It's out there. 250.79. So maybe this does go back up there, but it looks to me like we're kind of just, it was a pro gap and we're continuing. It looks like a continuation pattern. Palantir. Now, a lot of people want this stock to die for whatever reason, but it just seems to keep on holding. The 50 MA is the key MA, obviously. It's also that 61.8, so it lines up nicely at 172s. It is kind of roughly respecting the channel high, so we'll have to see what happens. I think the earnings are going to be the key decider here, because it just to me looks like we're in a sideways consolidation pattern, and maybe it just breaks up and out and goes full on, full crazy. If you go Tropic Thunder, go full retard, right? You never go full retard. That was a really funny movie. But yeah, it just to me looks like we're kind of respecting the channel and consolidating here. It still looks bullish though, but harder chase up here, I would say. Speaking of harder chases, the IONQ, this is of course the supercomputer plays. We came down. This is a must potential look below and fail here. If we have a higher low and then get over somehow 60, 90, I'm going to put an alert there. Create alert 60. I'm actually hoping for this goes lower because I have a play I want to do with it. Just say row long. I'll probably just sell some puts if this happens. Roar long. That's probably more accurate, right? But I was looking, I really wanted to do a 1/2 put ratio targeting the 50, like the 47 to 50 area, because that was the breakout. But hey, we might get a head and shoulders pattern. Maybe there's a bump up to the 20 MA. I wouldn't mind that trade if we got over the 60.91 for a move up here to 70.15 or whatever it is. We don't talk about it too much. The D-Wave phenom, the D-Wave phenom, it got the 4.236. I mean, look, the money flow was not confirming this. Same thing with, let me just go back, IONQ. Also, look at this, money flow bleeding out, not confirming. It's not oversold yet, but it wasn't confirming new highs. So, yeah, D-Wave, I mean, this got the 4.236. It's right on, kind of on the 20 MA and trend here. My guess is there could be a bounce to 37.62, but I would be more interested in D-Wave closer to like 19, 20 bucks. I don't know if we're going to get that low, but that was the big breakout. 1976 to 2056. Like I said, I don't know if we're going to get down there, but that to me would be an interesting spot to check back to the breakout. All right, Netflix. All right, getting rooked after hours. I warned about this rallying into numbers. I said I didn't like the setup. And sure enough, we're down. It's off the after hours low. The after hours dump low was 1147.64. Very close to the 1144.71 low, which we had to look below and fail of at 1134. So we're not even below the most recent lows. To me, this really is starting to look like we're in a range between these like 1134s, 1144s, and the 1231.30 plus, which was the old neckline. I've been hoping that this gets down to retest the breakout at 1064.50. We now have two earnings that were bad reacting. So maybe we finally do bleed down there, and that would be the channel low. We'll see if we get downgrades and stuff tomorrow. Obviously, anything below the after hours low at 1147.64 is more bearish, and then below 1134, which was the 10-2 swing low, would be increasingly more bearish for the next leg lower and maybe the retest of the old 1064 half, and we could finally fulfill Ra's al Ghul's destiny. ISRG. Deep cut Batman. Batman Begins there, actually. So, actually, I'm sorry, that would be the one with Bane, so it's the Dark Knight Rises. He was the one who used that line. Anyhow, ISRG, wow. I've told you before I'm very bullish on this stock for multiple reasons. It was also down enough, in my view, into the earnings. It did bend back up a little bit higher, but after you see a big move down like this to me, people say, oh, someone knew something. Yes, this to me looks like someone knew something the last few days. So, or it was just shorts covering. But to me, the break over the 20 MA was the buy. So what now? The after hours high was basically the 78.6, and we have settled in around the 61.8. So very simple. The bulls need to hold the 61.8 at 543.03 to get back up to 575.13. If they cannot, we will go down to 520.5, the whole fib to fib thing. Now, I don't know how much of give back we will get with this, but it may take a few days of consolidation. We've seen that happen kind of several times. But if we get down to like the 500-ish area, I'll probably if we got down to 45, 500, yeah. Why do I like this stock? First of all, I actually had the robotic surgery. I had hernia surgery earlier in the year, and what I realized is that right now the doctor manipulates the machine, but in a few years it's going to be the machine running the machine. It's going to be AI trained by the best doctors. They'll be able to run these things 24 hours a day, 7 days a week, 365 days a year, and they will make a lot of money. They'll probably have a lot less malpractice suits and errors because machines tend to make less mistakes. Now, I do realize it's going to take many years for that to be full fruition. It'll probably first be supervised or partially done by machine with doctor assistance. But I do think that this is the future, these types of robotic surgeries. The googliness. All right, so they got slammed today on OpenAI's browser, but then they were up on an Anthropic cloud deal. I view this as that there were some sellers at the 2 times range at 255.37. The 20 MA held, and we are up after hours. Now the bulls here do need to get over the 255.37, and then the channel high would be 270.76, and then the 2.618 is at 290.86, and then people are going to think it's going to 300, which it probably will. They do have earnings coming up. The last move here from 9.2, which is of course the famous at this point. Do I want to re-render this? I'm just thinking. Let me finish my thought first before I'm re-rendering, or I could do it simultaneous re-render. So what I think is that they got the good deal on the antitrust case, and they have just been kind of in a new up channel. It's sort of a pro gap. We're in a accumulation funnel at highs. So the channel high, if it were to do it on earnings high, would be 265. If it did the low, it would be 241. But that I think pullbacks, the first spike high on that news was 229.75. So really, as long as that holds on pullbacks, it's kind of all right. We're coming from a new all-time high. Into strength, I would trim a little ahead of Google, but I am a Google fan. I told you a while back that I thought this stock was going to go a lot higher, and it sure did. The Apple, we've been bullish on this one also, actually. We're very close to the channel high. We are starting to see some topping tails here, and the money flow hasn't caught up yet. It's not that it hasn't confirmed, it hasn't caught up. So that's something. The channel high is 268.68. If we did the yellow channel high, it's 270.19. I'd be careful with the lower high tomorrow. Really just don't let it get below 260.10 or just 260 on you. And coming into earnings like this at the highs, I would have loved more shake and bake, but at the highs, it may be a gap and crap if that happens. But I am bullish for Apple earnings. I do think the numbers are good, but I am cautious. I think it got the earnings move the other day. I mean, Apple up 10 is basically an earnings move, so it got the move. Could be a sell the news if we gap up again on the same news. Unless Tim has some amazing guidance. Now, the money flow has been bleeding out of Tesla. My worry about Tesla is, I know this is going to sound ridiculous, is that the first couple of the momentum stocks usually go the same way. And that's not always the case. It's not always the case. But Netflix was down, so Tesla may go down too. I think this is going to depend a lot on the conference call, though, with Elon. Now, I think Elon is going to spin some yarn, by the way, because he's got to thwart the tax credit expiring, which is big. Let me tell you, when I got my car, it was an $8,000 tax credit or $7,500 from federal and then $500 from New York. By the way, if you're in Colorado, they have a gigantic tax credit there, so you might want to look into Teslas in Colorado. couldn't believe it. I saw some guy post it on YouTube. I was like, oh my God. So I think it was bigger than the federal credit. Anyway, with regard to Tesla, they just came out with the cheap Model Y, the cheap Model 3, the performance Model performance Model Y. And I'm really curious to know what's going to happen with the Model Q, which is the robo-taxi, and the long range, which apparently was sold out in China. That's the Model Y long range, which is very fancy, by the way. It's got a whole third row and it's like they kind of fancied it up. But I think Tesla, I mean, based on having the great quarter, it's just a matter of what the guidance is and if he can spin some yarn on the robo-taxis. But we're so close to the old high, I'd be really surprised if we don't touch it. But I don't love that we're kind of, I would have liked it lower, like a little fear into all of these. I wish there was a little more fear. There's just a lot of complacency in these stocks. And things like ISRG can run because it had already been down. But things like Netflix that run into earnings, get walloped. And Tesla to me is close to the higher end of the channel, but it's sort of, we'll see. I'm curious to see what the guidance is going to be. Tesla, I think, might be a better trade after hours because so much is going to depend on Musk. We know the numbers are good, though. I tend to think we're probably going to have I'm just nervous because of the way Tesla went. I mean, the way Netflix went. I was going to say Tesla higher, but the way that Netflix kind of, it's usually the first couple go the same way and then the last few go the other way. So it's an ordering problem. It's the order of operations problem for me. Meta. All right. So I think the problem for Meta was that they had the TikTok going out of business premium taken out of it, which makes sense. Now they are over the fulcrum pivot at 721.73, and a fulcrum pivot is just the pivot between two highs, usually all-time highs and lower highs or a double top, basically. The break of the fulcrum pivot is usually what signals the double top, and we had a lot of conversation here, and it seems to be trying to break to the upside, which I do not like happening ahead of the earnings. However, Meta, the real trick is going to be if it can clear the 50 MA or not at 745.97, because moves below it and above it had been longs, and then the big question now is, are moves above it and then below it are going to be shorts? So we have to see if that takes place or not. Microsoft. I don't know what to make of this. It just looks like it's sold off. It hit we have now, I believe, a new down channel, but it's not really going down yet. It may take earnings to do that. But I would wait for what I'll be doing is waiting for it to break out of the channel for a trade up and out, or as a continuation play, if we break below the 61.8 at 507.14. So we hit this was the 61.8 on the downside here. Over here. And then we got the 61.8 on the upside for the bounce. So I'm waiting to see if we can break the downtrend or not. So yeah, very simple. Oracle. Now, I was wanting this day here on 10.7 to go a little lower to the 260.87 to 267.28, which is the 61.8 and then the old reference high from 731. We did not do that. Instead, we rallied to a lower high, and now we're coming back down. So I have a little note here, smaller size since last low was close, right here. So yes, I would be an interested dip buyer because it is the channel low, it is the 61.8, it is that reference high, and this is the area I wanted to buy it, but I would do it smaller size. As opposed to if we happened on 10.7, which I would have done bigger size. Okay. 3M. All right, so this is very impressive. The questioner, the requester, asked the resistance after 165. So the next resistance would be the channel high and the old all-time high at 174.71. I wouldn't let it get below 164.15 on you now. And for sure not below 160.47. That's a hard stop. And I know you'll say, oh, it's going to go. But, I mean, hey, this is a right out by the dip at 160.47. If that doesn't hold, GTFO. I had mentioned GE. Check this out. GE is up huge. This was the 8/28 year of 2000 old all-time high at 301.42. And this had this sort of big doji at the high. I'll be curious to see if it can hold this or not. But I'd be a seller, at least some up here, because this is 25-year highs. So, yeah, wow. I don't think the stock's seen these highs since Jack Welch was CEO. And, yeah, it's wild that all these stocks. GM, also multi-year high. This is back to the COVID levels, the 1522 high at 67.55, probably a good trim. I wouldn't let it get below 63.44 on you, which was the lower high. So could this keep going? I guess it's possible. I'd probably be a dip buyer on trend. The 100 MA seems significant. So 54.64 and rising. Beely, not one we've talked about often. Resistance after 31. Well, here's your problem. You're into the resistance here between 29.46 and 31.77. So this is the resistance area. After that, maybe anchor VWAP at 34.02. I mean, if you're in this for like, GE, like waiting till Jack Welch returns, I mean, maybe the big breakdown was 61.63 back here, 8.19 and 10.1 of 2021. Or is this even 2021? I mean, it's a long time ago. It does seem like it's trying to recover, but this area has been resistance multiple times. So I think it will be again, maybe overshoot anchor VWAP. Have a great rest of your week. I'll see you for the weekend video, late night Friday, early morning Saturday. Cheers.